David, one of the major conundrums in the United States, and I assume it's worldwide as well, is if you take shelter inflation out of inflation, there isn't much inflation. Every single person watching this is hammered by shelter inflation, particularly in the big major cities. Which does Jerome Powell look at? Does he look at all-in inflation, or does he look at inflation ex shelter, which basically says there's not much there?
Well, I always hate this. If you exclude all items, it's always unchanged. I mean, if you've got nowhere to live, fine, but people have to live somewhere. It's like you say if you exclude clothing and footwear. You mean if you come to work with no clothes on or shoes, then there's no inflation. It just don't work like that. You have to take the whole package. You have to look at headline inflation, and sometimes there's an argument when oil prices are flying. Do you look at core inflation or headline inflation? But there's no inflation. We've been trying to tell you and your viewers that for ages, and all these guys come on your show and tell you for 4 or 5 years 10-year bond yields are going up, they're going to heaven, and they never do. They haven't even broken 3%, and here we are, and we've got probably, you know, the rally is still going to come. There's no inflation. If you don't believe me, go demand a pay rise from your boss this afternoon. See how you left.
Well,
there you go.
I was actually,
that's why there's no inflation.
I think that sounds like a great idea. We'll do a joint meeting, me and Francine. David Bloom, your colleague Stephen Major deserves a victory lap on this. He's talked about low wages forever. Does HSBC reaffirm the linkage of David Bloom's work with Stephen Major's work, which is for a generally lower rate environment?
Yeah, that's what we've been arguing. We're not, when we even look at the dollar, we're looking at the structural and political components. You can see the power of the higher rates is not really propelling the dollar higher. You know, the Fed's talking 3, maybe 4 rate hikes. The dollar's not rallying. So there's something else in town besides this rate phenomena going on at the whole time. FX loves nothing better than a number is stronger than expected, interest rate expectations rise, and the currency goes up. That's not how it's working. Rates are at the margin at the moment. What we're looking at is structural issues in economies, we're looking at political issues in economies, and we're looking at rates. So it's only one in FX out of the 3 components. And as far as me and Steve are concerned, we sit next to each other and he buys me a cup of tea every morning.